Hello and welcome to Moneylife News and Views. I am Debashis Basu. What seemed like a one-off issue is starting to look like a trend. Collections from goods and services tax fell to 6.5%, its lowest level in the past 40 months. And at 6.5%, it barely tracked inflation, which means there was absolutely no volume growth. The trade deficit widened to $29.7 billion in August from $24.2 billion a year ago. India's merchandise exports, its weakest spot, and a clear sign of India's poor economic competitiveness, declined to $34.7 billion in August from $38.3 billion a year ago. The annual gross domestic product growth rate is down from 7.8% to 6.7%. The index of industrial production, which tracks the output of 8 core industries such as coal, oil, and electricity, was negative in August for the first time in 3 years. In September, car sales fell by 19% over the same period last year. Given how macro data is collected and collated by the government, a lot of this data or some of this data may turn out to be wrong. And so maybe it is not as bad as they appear, or they may be worse. We never know. For example, I would not rely much on the IIP data, the Index of Industrial Production data. However, both export and GST data is highly reliable. So is the data that is sourced from corporates, such as Purchasing Managers Index. PMI hit an 8-month low at 56.5 in September from 57.5 in August. Services PMI fell to 57.7 points in September to hit a 10-month low. It was 60.9 in August 2023. Home loan dispersals were down 9% in the first quarter, and auto loans were up only 2%, and personal loans up just 3%. Credit dispersal by fintechs is stagnant. In the April-August period, diesel sales rose just 1% year on year. A clear slowdown seems to have set in. The quarterly results season is on, and early results from the largest Indian corporates have been disastrous. Last week, Bajaj Auto stock price declined 15%, its largest weekly fall since January 2011, following the release of its Q2 FY25 results. Operating profit was down 2.68%, and operating profit margin slumped from 20% to 16%, a 4% cut. Worse, the management projected festive season sales growth of just 1 to 2%, far below the industry expectation of 5 to 6%. The Indian consumption story has been weak for a while. Poor economic policies have depressed the income of middle class and poor Indians, and real wage growth has turned negative. Even Nestle India's products, usually less susceptible to a slowdown, have been hit hard. Domestic volume growth was only 1%, and similar to saturated and stagnating in developed countries. Net profit was up only 7%, and revenue from operations increased just 3.3%. Tata Consumer, another large consumer goods company, reported weak results that pushed the stock down 7% on Monday. Two other behemoths of Nifty 50, Kotak Mahindra Bank and HDFC Bank, reported just 5% increase in net profits. Services exports is usually seen as a bright spot for India, but contrary to the never-ending bullish commentary about global capability centers, which dot Bangalore, Hyderabad, Chennai, and Gurugram, the growth numbers are underwhelming. Remember, services exports grew at only 8.92% compounded per annum between 2015 and 2024. Not surprisingly, Infosys' September quarter results were poor as revenues struggled to even beat inflation. Profit was up only 4.73%, and revenues increased by just 5.11% year over year. It was no different at Tata Consultancy Services, India's largest IT services company. Revenues rose just 7%, while net profit was up only 5%. Another Nifty 50 software company, LTIMindtree, reported a revenue increase of just 5.9% and profit growth of 7.7%. A recent research report by Novama says Indian economy faces a major demand deceleration. Several indicators are hovering around pre-COVID levels. One reason, according to Novama, is that government capex seems to have peaked out after 4 strong years, while private sector capital expenditure has not picked the baton as yet. It says India's corporate profit growth may also have peaked, as the top line is weak and best of the margins are behind as terms of trade have faded. As mentioned earlier, the first crop of results by large corporates seem to support this view. There are, of course, some positive data points as well. Net direct tax collections continue to be robust, thanks to India's booming stock market, yielding large capital gains tax. India's forex reserves have hit 705 billion. 5G smartphone sales are growing by 23%, making India the second largest 5G market globally after China. Electronics manufacturing has recorded strong growth, supposedly reflecting the success of Make in India. After a brief gap due to general elections, the government has apparently stepped up its capital expenditure in defense, renewable energy, and infrastructure. But these are pockets of positive data. They help in chest thumping, but pale into insignificance when set against the big picture of slowdown, which is poor private investment, weakness in manufacturing and exports, and poor wage growth. Neither corporates nor individuals are happy. Last fortnight, I mentioned that permanent changes being touted by the stock market experts, such as a strong banking system, current account deficit, manageable current account deficit, low inflation, controlled budget deficit, and low debt to GDP ratio, none of these hold up on closer scrutiny. Now, data shows that the Indian economy remains a cyclical play after all. There has been no fundamental transition to higher income through higher productivity and improved competitiveness. After all, prosperity is not India's birthright. We need to do the hard work of raising rural incomes through agricultural reforms, make mass manufacturing cheaper and exports competitive. These are nowhere on the agenda. We don't even know where to begin, given how fractious and polarized our politics and society have become. But the popular narrative is that this is India's century or India's era. If growth reverts to the pre-COVID anemic level, a lot of people may have to temper their rosy optimism. I do hope you liked what you just heard. Please do share and please do subscribe to the channel. Thanks for watching.